Well, welcome everyone. Thank you for joining us tonight, July 18th, for our presentation of CoreSSG, the stock analysis tool tutorial. Our presenter tonight is Ann Cunias, our super smart Senior Manager of Education Programs. You are in great hands. She's intimately familiar with the tool and is, as our education manager, knows everything about our methodology. Take it away, Ann.
Okay, will do. Thank you, Susie. And that was Susie Artsberger, and she will be watching your questions tonight online. But let's get to this. Have a brief disclaimer. I have to remind you that everything we're talking about here is for educational purposes only. We never make any buy, hold, or sell recommendations. There might be websites, there actually aren't. I can't think of any, or products or services not endorsed. I don't think there are, but if I do mention any, that doesn't necessarily mean we are endorsing those products. We are recording this session and it will be posted hopefully tomorrow. All right, so you are all here tonight because you want to learn a little bit more about our online tools, the CoreSSG in particular. Maybe it's a review, a refresher, maybe you're new. But we are going to go through this tool step by step, and we're going to show you how to complete a stock selection guide, how to save that stock selection guide, share an SSG, a stock selection guide, with your friends and investment club members, and update. And again, there is the recording that will be available on our YouTube channel, Better Investing. And you can subscribe to that and always be notified of when there are new recordings available. All right, so let's get started. I do want to talk a little bit about some of the handouts that you've got available. This quick start guide is one of them, and it is a really great piece that you could review after we go through this CoreSSG tutorial. It goes kind of fast. So this is a very useful piece that you can then review after the fact, some of the basic steps to get you started. Also in the handouts, we have some slide shots, presentation slide shots. I think it's called, I'm reviewing what it's called right now, CoreSSG tutorial handout with today's date on it. I'm not going to be teaching from a PowerPoint tonight. We're going to go live, but those are a takeaway for you, which will kind of review all the things that we do. So that's another good help. Finally, I've included SSG beginner guidelines, our guidelines for beginners, we call them. This is just a two-sheeter that gives some basic information on what does quality look like on an SSG and some basic guidelines for judgments. We're not going to be talking in detail about the methodology of the SSG. This is really focused on navigating the CoreSSG tool itself. And so we'll be focusing on those things. So I wanted to provide you with that piece in addition. Okay, so when we try to access the tool, the first question is, where do I get it? How do I get it? If you are a member, then you log in to your Better Investing website, www.betterinvesting.org. And this big green box is the key to your success. That's where our online tools reside. You just simply enter your ticker, hit go, and you get started. It's just as simple as that. If you are not a member, in the invitation to this webinar, there was a link to the trial version, which you can give that a try. Same functionality, and you can use it that way. So when you do put in a ticker and you move on into the SSG, this is what it looks like. Before we go live into the tool, I just want to give a little bit of a lay of the land, if you will. What are we looking at here? Because I'm assuming that many of you are new to the stock selection guide. So here we are. So looking at this, you're going to see lots of different information. One of the first things everybody notices is a graphical display of the data, front and center. Okay, it graphs different data depending on what we're talking about, and we'll talk about how you know what that is in just a second. In this case, we're looking at sales. It's a graphical display of historical sales. We've got that same data presented in a table right below. So if you're a numbers person, you can look at that, as well as the growth rate of the underlying overall growth, the trend line, we call it. In the core tool, which is designed for beginners, we have some basic education on every single screen. So if you get to a screen and you're not sure what you're looking at or why you're looking at it, at least start here. Read through the basic education that we offer you for each one of these metrics that we're going to look through, and that will help to get you started and maybe remind you of why we're looking at this piece of information. There's a legend, and we can turn various things on and off, peers and that kind of thing, and we'll talk about that as we get into the tool. We have several menu items up here on top, file, data, print, research, many things that you can do. We're going to highlight just a couple of those in tonight's webinar. And then we get to the basic navigation of the tool. And this is really what makes this really so powerful as a learning tool for people, because the navigation is broken up into these tabs that you see across the top. And there's 5 tabs, and if you go through the 5 tabs, 1, analyze growth, 2, evaluate management, forecast sales and earnings, assess risk and reward, and 5-year potential, determine 5-year potential. Follow those step by step, and then each one of those tabs has steps underneath. So I'm in step 1, and if I go through all the steps in order, then move on to number 2 tab with all of those steps, you just basically, it leads you through the completion of the stock selection guide. We can navigate by clicking directly onto those tabs or those steps, or we have these back and next buttons, which is just a nice way to just keep your flow going in the order in which it is designed. I forgot to mention one thing that I wanted to mention before we move on, and that is if you are not seeing what I'm seeing here. If you're trying to look at your tool and you're seeing something different, check this. Check that you're in the core right here. If this says SSG Plus, because if you're an SSG Plus subscriber, you also have access to the core SSG. And it's just a matter of flipping the switch. So if you see SSG Plus over here, come to the right-hand side and you can click on that core SSG button, and you will then see exactly what I see here. All right, well, let's go live to the tool, and I will bring over my internet browser. Here it is. Stuck on questions, getting those out of the way. Sorry, guys, my computer is just not cooperating. Here we go. All right, so here I am. I'm logged into the web page. I know I'm logged in because it's greeting me by name. There's my green box. So I am just going to put in the ticker symbol of the company that I'm going to look at tonight. And the company that we pre-announced was Old Dominion Freight Lines, and its ticker is ODFL. I type that in to this box and I hit go. And it's as simple as that. And it takes me right into the tool. And there's that first screen that we just reviewed. And there's this button. Let me just do that real quickly live. So if your screen is looking like this and you're trying to follow along, SSG Plus is your key that you're in Plus. And if you are a Plus subscriber, you always have access to Core. And I'm just going to switch it to Core. Same data, just a different view, a different, more basic step-by-step approach. All right, so let us talk about what we are looking at here. Our first screen starts off in our Analyze Growth tab. We're looking at the historical sales for this company, Old Dominion Freight Lines. Now, before we start talking about sales, maybe you're not too familiar with, I think I might know what that company does, but I'm not really too sure. Well, here's a tip. Hover your cursor over the title bar, and there you're going to get more information about the company. So here we see a lot of information, including the closing price of the day before, which is our most recent in our data, telling us when the fiscal year ends, what industry this is, it's trucking, what sector that is, what size company it is, so it's medium, because it's between $1 billion and $10 billion in sale. And then it gives us a nice little description of the company. And so we learn that their Old Dominion Freight Line is the fourth largest less than truckload carrier in the United States, with so many service centers and all these tractors, and 90% of their revenues comes from the less than truckload, LTL is what that stands for, less than truckload. So you can get an idea of what the company does just by looking at that inside this tool. That's very, very useful. Okay, so now we know a little bit about what it does. Let's look and see how it's grown in the past. And like I said, we're looking at historical sales. That's a nice graph. We see that there is growth going on because over the past 10 years, from 2009 through 2018, it's moving up in a generally fairly steady rate, I guess I would say. Looking down here underneath in the table, we see those data items along with the growth rate. These data items are what we see plotted here. Notice when I hover my cursor over the points, it's what I like to call an active graph, and it just tells me what that data point is. Same data that we're seeing in the table. This trend line is basically doing a best fit to all of the data points, and then this measurement of growth rate is telling us what that has grown at on average over the past 10 years. So on average, from 2009 through 2018, this company has grown their sales at 12.8%. The other thing I want to point out to you about the graph itself is this, notice this open circle. When you see open circles, that means that represents quarterly data that has just been reported. A whole fiscal year has not passed, but that is the quarterly data, those open circles. You can see how much change in the most recent quarter in this bottom box down here, where it's recent quarters, and you can see that's a 7% growth rate year over year. First quarter of 2019 compared to the first quarter of 2018. 7%, 7.1%. I want to point out that sometimes we like to measure different periods of growth. So you see that, you know, this is a little bit of a, I would call this definitely a cyclical company. It's trucking, so it does go up and down as far as its growth goes. It's not going to go really steady all the time. Economic recessions will affect this company, and actually the last recession is just barely on this chart, the last official recession in 2009. So let's say I wanted to measure, get maybe a better fit, and I can remove some of the data from consideration. So if I click on a year here, 2009, notice it removes the data, it refits the trend line, and it remeasured that growth rate. So instead of 8, now it's down to 11.8. I can do that again for 2010. I could do it here on the chart, on the graph itself, or you can do it in the table also. So I'm clicking left mouse click, and again, it removes the data, refits that trend line, remeasures the growth rate. And that actually looks like a little better fit for the last maybe 8 years, 10.6% as opposed to the 12.8%. You're going to want to do that for when you see companies that are kind of maybe slowing down their growth, or just something that you want to be able to get a better measurement of the relevant growth. So you can take those as outliers. I also want to point out that a very powerful piece of this tool is the ability to compare peers. So you can compare the sales growth or any metric with peers that are selected. Now, there are some peers that are selected by default in our tool, those that are in the same industry, in the same size group, and the best growers by earnings are included, the 3 peers. So here we've got 3, and I'm looking at them, and oh, this one doesn't have very much history, so that doesn't make it a bad stock, but maybe I would like to change that. Maybe there's one that I would like to include that's not on this list. So you can hit this change peers button, and you can actually put any peers on here that you like. So that last one, that one in purple, was this SNDR. So I'm going to remove that, and I'm going to replace it with forward air, FWRD. There it is, forward air. It finds it for me. I'm going to update that. That now gets saved with this particular study, or it will when I do save the study. And you see that Sander, or whatever it was, I'm not familiar with it, is gone. There's forward air, and I can now, in the gold color, see how they're growing. Also, you can put on industry averages. This is all very useful, and I'm not going to go through this on every single one of these pages, but these are the kinds of things that you're going to want to look at and analyze, because you are looking for one of the best companies in the industry. You want something that is excellent, superior, not just something that might be lagging behind the rest in the industry. So it's a good practice to check these peers, these competitors. And again, you have the flexibility to put any competitors on there that you like. All right, that is historical sales. I'm going to move on, and our next step in our first tab of Analyze Growth, which I haven't said it before, but this first tab is all about evaluating the quality of the company, as is the second tab. That's all we're doing. So I'm going to go to my next step, and now I'm looking at my data for the historical earnings per share. Same thing. We're looking at our 10 years of history. There's our data down below. You can see what the values are, or you can look them up in the table. Our growth rate is 31%, which is quite a bit higher than the sales growth. Our most recent quarterly data we see has grown at 23% from our data right here. And again, I may want to eliminate some of the data to get a better fit, a better representation of historical growth. So I just took off those first 2 years, similar to what I did in sales. That doesn't necessarily have to be the case. I do treat each graph on its own. But notice that went down from 30 some to still a very robust 22.7%. So obviously this company has been doing something very good to be able to grow their their earnings so much faster than their sales. That's good. But again, quality is quality here. I say yes, because we have growth at a very strong rate and at a fairly consistent pace. Okay. Moving on to the next screen, the next step is where we put our historical stock price review. Here we're putting everything on one chart. So we've got our sales in green and our earnings in blue, and then these bars here are our price bars. And what we're seeing here is the high and low for each one of these years. Kind of not being able to get to that, but anyway, I will go to the recent one because this recent one is telling me for the last 52 weeks what the high and the low, that's the I bar, and where the red is, that's where the current price is. So what am I looking for here? Well, to see quality, I like to see my sales and earnings growing consistently and growing fairly in parallel with each other. We like to look for up, straight, and parallel, railroad tracks, however you want to term it. These look really pretty good. I see nothing to stop me from going on with this, so quality check. The other thing that I'm looking for here is, has the stock price kind of moved up along with those sales and earnings? Because in our methodology, we've got the fact, we say, we teach, we learn that basically sales drives earnings. So sales growth will drive earnings growth. And over the long term, earnings growth will drive the stock price growth. And we see this right here. Of course, it's not in lockstep, but I'm very happy with what I'm seeing here. All right. That is pretty much all we've got on analyzed growth. We've just looked at history and we're asking ourselves, is this a quality growth company? So far, the answer is yes. I'm going to move on to the second tab where we're going to continue asking ourselves that question when we evaluate management. There's 4 steps here, and here we're looking at a historical graph of the percent pre-tax profit on sales. So basically what this means is how many pennies of profit has the company made on a dollar's worth of sales? I think of it that way. So I can look at the data, or I could hover here, and I can see in 2018, Old Dominion had 20 cents of profits for every dollar's worth of sales. I also am noticing that the profit margin, that's another term for percent pre-tax profit on sales, has been increasing. That's nice. That's very nice. It's also nice if pre-tax profit just maintains a nice, steady, horizontal line. That means, that profit margins are staying nice and steady. If they're improving, that's great too. Looking here at the bottom, at the actual data that we've got here, we see the last 5 years are highlighted, and we take an average of the last 5 years just to kind of give us an idea of where it's been. This is very useful on this chart and the next one in particular, and the debt actually, to compare to your competitors or your peers. And so you can see that this, something I haven't told you, I don't know what the name of this company is. And notice this little triangle, and I get a little pop up there. It says open close data grid. If I open that up, well, I'm going to get the full name of the company. It's ArcBest. And I can get a full view of all of the data. So I see that they're not quite as profitable. For whatever reason, they're actually quite a bit less profitable. Their profit margins are very low compared to Old Dominion. Makes me think maybe they're not a really good representative of a competitor for this particular company. Forward Air, I see theirs are lower, and more disturbing to me is that they're kind of declining. I see a more or less a decline there over the past several years. And then this other one has a nice trend, but again, if we are looking at who's the winner, who's the most profitable, it would be the one that we picked, or the one that we're looking at initially, Old Dominion. Also, you might want to throw the industry average up there just to see how does your company compare to the overall industry. I'm just going to take some of these off. Again, superb. Looks really, really good. All right, I'm happy with that. I am going to move on to the next step, and this is percent return on equity. This is another quality metric. Equity in the company is basically the net worth, and this is measuring how much did the company earn as a percentage of the net worth of the company. How have they taken that equity and turned it into profits? Again, when you see a rising trend on a return on equity, that's excellent. We like to see that, but again, just like for pre-tax profit margin or percent pre-tax profit on sales, even if it was a horizontal line, that would be okay too. We do have some metrics here, whereas for pre-tax profit, different industries have different normal rates. Okay, so for example, I always like to use grocery stores as being, a very low profit margin company, maybe 2% is all they earn. Whereas technology or software companies might be, 40, sometimes 50% of profitability, profit margin. So we don't have any absolutes when it comes to profit margins, but do look at others in their same industry. Return on equity, we do have some guidelines we look for. We like to see companies with at least 15% return on equity, and 20% might be considered excellent. I'm looking at the numbers here, and while they did have a tougher time in 2009, probably coming out of that recession, they've been building it back up since then until lately a very nice 22%. Again, looking at a few of their competitors just to see how did they stack up, and maybe throwing the industry average on there, which really made everything squish. Because I'm just going to point out, as you put different data on here, the chart, the graph automatically rescales. So because that blue line, the industry average, had quite a range here, it made everything squish, and sometimes it's just better to look at the data grid. So I'm going to take that off for right now. But anyways, I'm very, very pleased with where Old Dominion is falling with return on equity. It looks like a high quality company, and I am ready to move to the next step. The next step is taking a look at total debt. This is a number of absolute total debt. How much debt does the company carry? This is kind of a real quick check for me. It's not overly useful, except I do love to see this trend. I love to see, oh, they had some debt and now they've paid it nearly all off, and it's very, very low. But the problem is that when I'm looking at just debt, it doesn't put it into context of anything. So that's why I don't linger here too long. I go to step 4, which is also about debt, but it's percent. It's the debt as a percent of the capital, which gives it a little more meaning. Okay. Here again, a declining debt is lovely. What we like to look for in better investing is, especially for an industrial company, something less than maybe a third of their capital structure to be debt. This company used to be right around a third, 34% back in 2009, but they've been paying that down until now. They're very, very close to zero. I like that trend. Again, just to make the point to show some of these other ones, Forward Air, they don't have much debt. This ARC, whatever it was, has more. And the industry average, this is an industry that does carry a lot of debt, trucking. And so the fact that we're looking at even all of these that have lower debt, these are all looking good compared to the industry average. So based on what I just saw with the pre-tax profit margin, the return on equity, and the percent debt to capital, this still looks like a stellar quality company that I definitely would want to continue to look at. And that is where you pause and because you're not going to want to go on and complete a stock selection guide, because the next parts are going to require you to do a little bit of research. And why would you do that on a company that is not a high quality company? So I say yes. But before we move on, Susie, I'll ask you, are there any questions that have come up with our little quality review that I can address? And Susie, are you muted?
Yes, I am. Thank you
All
so
righty.
much. And we are doing a pretty good job with questions, but I do want to bring up a couple that are very common that we've seen come through. One of them is, does the peer group average change when you change peers?
Great question. The answer is no. The peer group average does not change just when you make a new set of grouping of whatever. Call them competitors,
Right.
call them peers. We have a very defined way that the peers are automatically selected. And so that the peers, the industry, it does not change. It's all made up by how they're defined in our data. Anything to add to that, Susie? Because you are the data expert on all of
No, you
this.
you did a great job.
Okay.
Well, actually, I'm going to answer this one live. How are the peers selected, which is part of that answer? The peers are selected be if they are in the same industry and are of a similar size, small, medium, or large, and then they are ordered by growth rate or earnings per share growth rate from highest to lowest. So we'll take the top three. The other
And if
question,
I
oh,
was
go
just
ahead.
gonna I was just gonna add, if you can't remember that, that little handout that has lots of slides in it that we're not really going through per se, that there's a slide that says exactly what Susie just said. Good job.
Okay, I passed. The other question is that I know we get is, I don't know if I have the tools, and I'm going to answer that one. And the answer is just try it. And if you get to the core SSG, you have the tools. If you can see the SSG Plus button in the upper right, you have SSG Plus also. So that's the easy win. Just try it. Um,
Right.
that's Oh, another question is the size of the company governed by revenue or capitalization? And you can answer that one.
Yeah, what we in Better Investing do is we classify size by sales, the annual sales in the most recent year. So remember here, we looked at our analyzed growth, our historical sales for, this is in millions, so $4 billion of sales. And just to review, company size is medium because it's between $1 billion and $10 billion in sales. Less than 1 billion is a small company. Over 10 billion in annual sales is a large company. That's how we classify our company sizes.
Okay, great. So that answers that one. We're going to take one more that I will answer. Do we use a SIC code or a NAICS code to select peer industry? Those are acronyms that are like government codes for companies, for classifying companies in an industry. And the answer is we don't use any of those. We use Morningstar's classification system because it comes to us with our data feed. And if you want to Google what that's all about, that's the Morningstar Global Equity Classification System. And they have categorized their entire universe of stocks that they cover into 11 sectors and over 100 industries. I'm guessing at that number, but I do know it's over 100. And those are the industries that we are going to use. So I think at this point, we can answer the rest of the questions that have come in. We'll answer them through the chat and you can move on.
All right, super. All right, so I think I'm saying this looks like a high quality growth company. I hope you agree with me because we're going to move on. We're not going to switch now. Okay, so I'm going to move on to my next tab, which just to show you a different way to navigate, I will click right on it. And this is where we begin our judgments. This is where we forecast our sales and our earnings. There's two steps here. First is to forecast sales. So looking at our data here, what changed? Well, for one thing, our graph expanded by 5 years, okay? Because now we're looking 5 years out into the future and making a projection. We've got some additional data here. We've got analyst consensus estimate. This is just 2 years for sales, I'll point out. This comes to us from Morningstar. It's an analyst consensus estimate. So a grouping of analysts submit their numbers to Morningstar, and then they take an average on that, and we display that data here. There's other places where you can also check for estimates, and I would always recommend that you do so. As I said at the beginning, we don't really have a lot of time to go into a lot of judgment items, but this is where you're going to want to do a little bit of research, look at the company website, see what they're saying about themselves, check some other websites for consensus estimates. I'm going to point out that this research link that I'm hovering over right here is going to become invaluable to you as you learn about this tool and you learn about investing. There's a number of places you can go. One of the most frequently visited ones, I think, is the analyst estimates tab here. You see that when I'm hovering over that, I got a flyout of six different websites. I generally like to check a couple of them, maybe Zacks and Yahoo. Again, for sales, that's going to be generally shorter term, 2-year, 1 or 2 year estimates. But again, it's data, it's information, and you can see what the analyst community is talking about. In addition to the research that we have for free on here, which these are all free sites, and I would encourage you to explore those, you might find some research reports at maybe your local library or through your online brokerage. Things like a value line report, a Morningstar analyst report, which is different from just our data. They will do a long report and commentary and will give some ideas of growth rates. The CFRA report, previously known as S&P reports, if you remember them that way, but they're now the CFRA reports. These are 3 common reports, analyst reports that are often available at many local libraries for free and or your brokerage. And I say for free because all the ones that I just mentioned are premium services. They cost money if you as an individual were to subscribe to those. But many libraries, I'm very lucky, my library has access to all of those reports, and it's very, very nice. So what we're doing here is we're thinking about what we saw in our history. We're thinking about the research that we did. I just did a little bit of grabbing some numbers. I have not really researched this in any kind of depth. And what I found was that most of the analysts are saying between 5 and 7% on sales growth over the next 2 to 5 years. Some of them went as far as 5 years. So I'm just going to make a decision here without belaboring the point, and I'm just going to put in 7% for my future growth rate. And we're not going to argue about that too much today. All right, so what I do is I type that 7 in the box where it says enter your 5-year annual growth rate. Update your study. Watch. Oh, I forgot to point out one thing on the graph. I did mention that there's this 2-year analyst consensus estimate. Well, that's what this little solid green line that's out into the future represents. If it grew at this 4.9%, that's what the next 2 years would look like. Our projected line, our dotted line, is our projection, and we haven't made a projection yet because I haven't hit update study. Right now it's flat, it's 0. So I wanted you to notice what's going to happen when I hit my update study. That line is going to, boom, go up, and there it is. And so if this company were to grow at 7% over the next 5 years, that would result in sales of approximately $5.7 billion 5 years in the future, or in the first quarter of 2023. Now, why do I say the first quarter of 2023? Well, you are in charge of where your projection starts. We have options, and I'm going to point you to this box right here. Typically, and I use the quarter projection start point, because typically for a high quality growth company, I want to give them credit for all the growth that has taken place, and I want to see what a true 5-year projection would be. So I want to project from the most recent quarter and then go out to the first quarter 5 years in the future. We have some other options that you may choose to use occasionally, and I'm just going to point out. One is annual, and what does that do? So let's watch this number, 5.764 million. If I switch this to annual, it's going to back up my line just one quarter to start at the last annual data, the 2018 fiscal year data, and then go out 5 years from there. We dropped just a little bit because there's only one quarter, but we did drop just a little bit on the future sales because we're not going out quite as far, okay, if that makes sense. On occasion, you may want to use a trend. Those are special cases. If you're a beginner, I would say, if you think you need that, you probably shouldn't be studying that stock, but it's an option. My choice, almost always, with some exceptions, is this quarter projection start, which is our default. If you do want to change your default preference for all new studies, you would go into here, Tools, and then Preferences, and you could choose to change that to whatever choice you have. And what that would do is it would change your preference for all future studies. Or you can just change it in the study itself right here. All right, I think that's all I wanted to say about sales. Let's move on to step 2 here, and that's where we're going to forecast our earnings. Same kind of drill. Okay, so we've got our 5 years expanded graph. We've got a consensus estimate, analyst consensus estimate. This one is a longer term, 5 years, EPS long-term estimate of 6.8%, and we give it a dollar value there as well. Our estimate is 0, flat at this point. Again, I would encourage you to do a little bit more research with the sources that I talked about before. Again, going to the research link, analyst estimates. We've got other webinars. If you have questions or want to learn more about that, we have lots of webinars about that kind of information. But for today, I am just going to take all this into account, and while it may look conservative-ish because we've got 22% sales growth rate, and I did just do, like I say, a couple quick checks on some of the easy reports to access. Generally, earnings are projected to grow a little bit higher than sales, 7 to 11%. But for my purposes, I thought I'm going to stick with what I picked for sales, and I'm going to go 7%. Okay. Sometimes I go a little bit higher on earnings, but for demonstration purposes, I'm just going to stick with 7 and 7. Now watch what happens to my earnings per share growth rate. My growth projection, I should say, my dotted line gets drawn out 5 years in the future. There's our first quarter 2023, and that would end up to be an earnings per share of $10.80 at that point in the future at a 7% growth rate. Again, I could change my projection start point, but I see no reason to do that at this point, but you can. Okay, that is that. Now, before we go to the next step, I want to point out one very important item, and that is why do we do this? Why are we making these growth projections? Well, we are making growth projections ultimately on the SSG to help determine if the stock is selling at a reasonable price. That's really what we're doing when we make our projections, and with the last 3 tabs, I guess, on the SSG. Is this stock selling at a reasonable price? We've already determined it is a quality growth company. So now we just want to know, at what price is it a good investment? So we use this projected earnings per share 5 years in the future. That is a key component of our future high price, our estimated, our forecasted future high price, where we think the price is going to go. So that $10.80 that we just projected based on our 7% growth rate is going to come into play in our next step. And that's where we go and assess risk and reward. So I'm going to go next, and that's where we're going to go next to the 4th tab, assess risk and reward. The 4 steps here, and the first step is to forecast the high price. Now we've got a big graph here, and what are we looking at? Well, if you're not sure, always you can get a clue by looking at the table below it. How is it labeled? Well, we're looking at historical high PE. Okay, that's what we're looking at here. And so you can see that, I don't know if you remember, but back when the earnings were low, people had confidence in this company and they were giving it a high PE. They thought it would come back. In the time of more steady growth, we see that their PE, their high PE on average over the past 5-6 years has been in a fairly tight range. You can look at the data down here, around 23-ish to 26-ish. So looking at the most recent data, which is the data we have highlighted in green, we take an average of that just to kind of give a snapshot of what has it done recently. Now you might use that or not use that. You're going to use this graph to show you trends. Are PEs contracting, going lower, or are they expanding, going higher? What do you think is the future? You know, PEs are tough to forecast, frankly, I think, because you're trying to forecast the mood of the market. But I think if in this case we have a fairly steady grouping here and a fairly representative average, I think 24 looks like a reasonable PE, high PE, future high PE to use, and that is what I'm going to do. So I'm just going to type in 24 into that box where it's asking me to enter my average high PE. I'm multiplying that times my high earnings per share forecast. Remember our 1080 that we got from the previous screen. Multiply those 2 things together, and that is giving us our forecast high price. So based on the judgments that we have put in here, that's the high where we think this company might sell 5 years in the future or sometime during the next 5 years. Oh, I forgot to point out that we do have some reference numbers here. In addition to the 5-year average, which I was talking about in the table, we also put it right here. We give you the overall average, which is the average of the average high PE and the average low PE. So it's the average of the averages. So it's the overall average. As well as we give you where is the current PE. So there's other pieces of information for you to consider. Research, it's really tough on PEs. Value line gives you a number, but there's not a whole lot of, and they're an average number. They don't say, oh, we think it's going to go as high as this or as low as this. They give you an average where they think it might be over the next 3 to 5 years. But I'm pretty happy with the 24 that we've come up with based on the data that we're looking at. So I'm going to, very important, update study. If you forget to do that, you will be alerted soon. But I'm going to update that study. So that means I've locked in, or not locked in, I have set a forecast high price. I can always come back and change it. All right, next step, doing the same for the forecast low price. Same kind of a graph that we're looking at here, historical low PEs over the past 5 years, or excuse me, 10 years. And again, I'm seeing a lot of gyration, but over the last 5 years, I'm seeing, 14-ish to 16-ish, average being 15. That 15 seems to really represent well the last 5 years. I don't see any big trends one way or the other. So again, I would probably just choose to use the 15 for this quick, and I'll call it an initial SSG. So again, this is a little bit busier graph. So notice that I'm coming into this second section. We're going to talk about these other ones in just a minute, but 95 times out of 100, I am using this box as my low price forecast. I put in my low PE forecast of 15 based on the data that I saw there. I'm multiplying that times the low earnings per share forecast to get a low stock price forecast. Now, where did this low earnings per share forecast come from? Well, that actually, there's a hint right here, that it came from the trailing 12 months or the last 4 quarters of earnings per share. What that means is that it's accumulating the most recent 4 quarters and using that as my low earnings per share forecast. Alternatively, sometimes people like to use just from the last fiscal year, instead of the trailing 12 months earnings per share. You can do that, but again, because I like to forecast from the quarterly data to truly grow or to project a true 5 years of growth to go out that extra quarter or 2 quarters or 3 quarters, I typically will use this trailing 12 months earnings per share as well, because I truly do think for a high quality growth company, in general, not always, but in general, this is probably the low point for the earnings per share over the next 5 years because it's growth. We expect it to grow over the next 5 years. So based on that, I'm picking, I could set $115 per share for the low price. Now, before I select that, I always do like to double check it against the current price. And I like to have that number of the low stock price be at least 20 to 25% below the current price, because that gives me some space as far as market volatility, craziness that's going on. If my current price is 153 and I'm projecting my low price to be 150, well, the market can do that in the course of a day. So that's just not enough of a safety net or a reasonable even low price. So I want to make sure that that's at least 20, 25% below the current price. Roughly that would be $30 less, 123. So yeah, we're more than, we are less than 20%. We are more than 20% below the current price. So I'm pretty satisfied with that. Now, a couple of other alternatives. On occasion, you may want to just plug in your own price. You can do that. Or you might take a look at the recent market lows. And what we talk about there is the lows over the last 2 years, basically, plus the 52-week low. And in this case, it's the same. So you could take that. I am happy to see that my low price is right around the 52-week low and the 2018 low. I'm pretty happy with this low price. So you would make sure you have a radio button next to the price that you would like to select, and then click on your update study. Alrighty. I think that's all I wanted to say there. I think we're ready to move on. So what have we done? We have set a forecast, or we have forecasted based on the judgments that we have made. We have set a high price and a low price. And at this point, we are going to assess, well, where are we right now with the current price? And we set up these zones, our buy, hold, and sell zones. So we take our whole range from our low price that we just forecast to our high price, divide that into quarters, with the bottom quarter being the buy zone, the top quarter being the sell zone, and the middle 50% being the hold zone. Visually, I see that the current price is in the hold zone. It's near the buy zone, but not in the buy zone. You can see what the details are here. It would have to get below $151, so not that far away. So that's based on the zones. Another way we look at this data is to kind of gauge potential gain versus loss with our upside downside ratio. So here we're looking at the upside downside ratio is basically telling us what our potential upside reward is compared to our downside risk. And we would like our upside reward to be 3 times larger, at least, than our downside risk. This is Are you hearing me?
Yes,
Okay.
we are.
Okay, that whole time, maybe.
Yes,
I just
yes,
got I had a
absolutely.
message that I was losing my audio connection. Okay,
You are
great.
doing great. Thank you.
Thank you. Okay, so upside downside ratio. It's kind of telling us the same things in a different manner is what those are. So zoning here, upside downside ratio there. One more very important item to determine if this is a fairly priced stock, a fair value, is to go to the fifth tab and determine our 5-year potential. This is where we kind of put it all together and what our total return might be. So what are we looking at in this chart? Well, this chart is a chart of the payout ratio. And I'm just going to expand this data box. Remember that triangle. Anytime you see that, you can open that and get more information. So this is payout ratio. And what that tells us is what percentage of the earnings does this company pay out in the form of a dividend to its shareholders? And what I see from the graph and the data is that Old Dominion is a recent dividend payer. They just recently introduced a dividend. You can see it was 0, 0, 0, 0 all these years. And now they've got a small dividend that they are going forward with. 7% basically over the last 2 years, right? Fairly consistent. It's really on a new dividend payer, it's hard to know where they're going to go, but this is a minor judgment, I will say, as far as the total return goes, but it is an important one. It can be an important one. So you can make another judgment here and you can change, well, I didn't put that. Okay, All right, I'm just going to change that. um, you can change that, but if you don't change it, I want to just drop down here because that's what we're looking at here on the chart. This is payout ratio, which on this chart, it's kind of odd the way it is because it was 0 and then it jumped up because it's a new dividend payer. But I want to bring you down here to show you the components of total return because there's two pieces, or there can be two pieces if the company pays a dividend. You have the potential annualized price appreciation. That is, if you were to sell sell this stock at the high price that you projected, that would be an 11% annualized return over the next 5 years on price. And then what piece is the yield going to contribute? Because it will contribute to the total return. In this case, very small based on the 7.1%, 0.3%. Current yield is 0.4%. I'm just going to show you just to demonstrate if they announced, oh, we're going to start paying a 20% payout ratio, 20% of our earnings in the form of a dividend. If I were to change that to 20, watch what happens to this 0.3. That goes from 0.3, to 0.8. A rather large and dramatic change in the payout ratio had a fairly minimal change, only 0.5% on the total return. So it's usually a fairly minor judgment, but it is one for you to be aware of. I'm just going to put this back the way it was because I really don't have any future information, and that looks reasonable to me. They've held it for 2 years so far. All right, so the bottom line is that this company, with the judgments that I placed in here, with my growth rates I put in and my PEs, based on that, I might anticipate that this company will return 11.3% annualized over the next 5 years. At this point, you would ask yourself, is that enough? We like to use a 15% metric. 15% return will double your money in 5 years. That may not be what you're always looking for every single stock. I will say for a cyclical company such as this, and getting towards where I think we're kind of long in the tooth in the current, good economy with no recession, I would want a higher return at this point than 11.3%. So I would put this on a watch list and wait until that came up at least into the buy zone and maybe closer to a 15% return than the 11% that I'm seeing there. All right, so that completes our stock study. I am just looking at my notes to make sure I'm not forgetting anything before we move on to the all-important saving, because we haven't saved anything yet. And we have this big yellow box here telling us, hey, don't forget, you got to save this if you want to keep it. Well, that's easy enough. I'm just going to click on that box. By default, the name that it will be saved under is the ticker and the date. I might just add the words tutorial. So I remember that this was, did I spell that right? Yep. This was for the CoreSSG tutorial, and I can save that. And now my yellow box will go away. My name is there, and it is placed in my studies, okay, my list of studies. And you can name that whatever you like, but typically a ticker and a date, or maybe if you've got a couple different studies, you might have a club name versus your personal SSG for Old Dominion, something like that. You can have multiple. Okay, the next thing I wanted to talk about are some of these other features that sometimes get overlooked. And print, the one I'm hovering over right now. Print, people always say, okay, when I'm done, I want to have a copy of this. All right, well, print is what you want to do. When you click on print, you're going to have the option to just get the straight up 2-pager SSG. There's a notes feature, which we haven't talked about, but there's a tab that you can add your study notes, and you can append those to the report. But I'm just going to click on this. We generate a printout and I've lost my PDF. Oh, no. Now maybe you're not hearing me?
We,
Lost me for
you
a
went
second.
away, lost you for a second, and double check and make sure your PDF, you're using two screens. So often it appears on the opposite screen, remember?
I kind of remember that, and I can't find it. All right, hold on. I don't know where it went. Yeah.
As the
Well,
audience is pointing out, it's right there at the bottom.
oh, thank you. Thank you,
Okay.
audience. You're so
See?
smart.
We have a smart audience. Thank
I
you.
was just being impatient because it wasn't there right away as quickly as I wanted it to be. I was being impatient. So anyway, to get back to where we were, here is the printout. There's our 7% growth rates. It even remembers, the data for sales and earnings. Remember, I marked off a couple of those. It's a little bit different view for evaluating management, but there's our pre-tax profit on sales, return on equity, debt to capital, PEs, all of our high price, our low price, our zones, and there's our bottom line, if you will, our 11.3. So you can take that to your club meeting and or distribute it however you like, save it in your files, or just save it on your computer. So from there, you can print it or share it, what have you. Which brings me to my next item, sharing. How am I on time? Oh, we're getting close. Okay, so I do want to do this really quickly. So you've done this. Say you're in a club meeting and you want to make everybody aware of, you think this is a great stock. Share study is under file. When you click on that, you have a number of different options here. You can share a copy of the online study with any recipient that is a subscriber to the tool. You can share an ITK data file, and this is useful if you are sharing with somebody that uses the desktop program Investors Toolkit. You can share the PDF, just like what we created right there. You can share your notes. And then you can, send yourself a copy. You can select your recipients. You can manage this address book. I could send one to Susie here. She loves it when I send her stock studies. You can add a personal message. Here's my study on Old Dominion. Let's take a look at this at our next club meeting. So share study, and what that does is you're going to get all of them, Susie. You're going to get all 3 versions, and she loves it that way.
I love it.
Yes, you do. And what that does, and I don't have time to do it here, but she's receiving an email now in her email, and there's a link in there to click on because she is a subscriber to the tools, and she will be able to open it right in the tools. Or there will be an ITK as an attachment on that email, and there will be a ITK file if she wants to bring that into her toolkit program, or if she just wants to look at the PDF, that's also attached. So that's sharing. What else did we promise? We promised to talk about updates. And I'm going to give you a little introduction to quick navigation, because while this My Studies tab is very, very useful, and it lists all of your, and I have so many studies, that takes a long time. Anyway, it's all my stuff. And you can get them this way, but I'm just going to go back to the SSG. This was a mistake. Oh, there we go. I have too many studies, folks. Using this quick nav is a great shortcut, because what this does is it allows you to open a new ticker, just quickly, or search all of your saved studies. So for instance, a couple months ago, I did for something, I think a first cut or something, I did an Apple, and it's called Apple Demo. And it's a little bit old data at this point, or maybe not, actually, 3/18/6. I don't think they actually have announced their 6. So anyway, but I'm going to show you data, refresh study data. This is how you update the data. I've got judgments in here. So I've forecast my sales and my earnings, and I've forecast my PEs, all of that. None of that will change, I should say, when I refresh my study data. It's alerting me that my data is more than 7 days old. I could just update the stock closing price, or I could overwrite all the data with the closing price, or I could even create a brand new copy of the study with the updated data. I'm just going to overwrite this whole thing just to show you that I can, and I just did, and I'm going to go back here. Yeah, I verified. That probably wasn't the best example because it didn't give me a new quarter. They haven't announced yet. I think they announce next week. But they did update the price, which I can look at somewhere. Closing price, 203. Well, we forgot to look at that before, but it did update the price. So it updates all the data, but everything else stays intact is the point. So refreshing data just fixes the data, updates it to the most current prices, earnings, fundamental data, if there has been any. That's under data and refresh study. And I know that went fast. That is all in that handout document as well. I think we're gonna, are there any questions, Susie, before I go back to the PowerPoint for a few quick wrap slides?
Well, we have handled a number of different questions, and I think we're doing pretty good with those. This is a question that's a little bit beyond the tutorial aspect, but it links back to some questions people were asking earlier when you picked growth rates. And I know this is not a class on methodology, so you might want to point them to where they can view classes about how to do more research. But the basic question is, do you ever compare your growth rates that are in your head or the ones you've chosen with any known source?
Yes.
As a
Okay.
comparison?
As a comparison, that's a great question. So the answer is yes, for a comparison. Would you like to know what others in your community of better investing investors are thinking? Yes, you might. So I'm going to bring you to this research tab. And actually, I should go back to that other one. Well, it doesn't matter. Better Investing research. Okay, we've got a company research page. You can go to the magazine, but the one I'm going to talk to you about is member sentiment. And I'm going to click on that for Apple. And what that's going to bring up is member judgments from recent studies, the last 90 days. There's a boatload of them. There are 854 studies for Apple in the last 90 days. Obviously, people are interested in this stock. You can scroll through the data and look at it. You can select everything and go way down here to the bottom and look at an average. So I can see that the average sales of all these people are 6.7, earnings growth 9.5. You can see what all of the columns are. So yes, compare to see what other like-minded investors are thinking about the company you are studying. Of course, I talked about resources that help me form my judgments while I'm making them, the analyst reports and that. But I do like to look at member sentiment just to see, what are people thinking? And so this is a long list. It wasn't quite as long for Old Dominion, I have to say. There was only maybe 100 of them there. But go check it out. I think they were kind of in line with what I put in here on Old Dominion. Oh, heck, now I really want to go see. I'm just going to go to that tutorial that we just did. See how easy that was? It was right at the top of the list. I went to my quick nav, and my most recent ones I've touched or looked at are right at the top of the list. I'm going to go into research again, member sentiment. Let's just see. Well, those probably are all mine. I don't think I did that many. Anyway, average, 7.5, 7.9, 23, 15, really similar. We're all kind of on the same plane here. So take a look. 108 in the past 90, yeah, right. A lot less than Apple, but the more data, kind of the more statistically significant. Be wary of the member sentiment when you only see like 20, 20, 30. It's interesting. I wouldn't really use these averages for anything. But it is interesting to look at and to kind of self-check yourself. Am I in the right ballpark, or am I wildly out of the ballpark? All right, we were on time, and now if
It's
there's no
time
more
to wrap up.
questions, I'm going to wrap up. And I do really want to quickly point you to the help and information that we've got here, because we've got all these tutorials posted, recordings. We will get this new one replacing the old core tutorial, hopefully tomorrow. All the quick start guides, I gave you the core SSG in the handout, but you can see the other ones there. Reference materials, there's that guidelines for beginners that I included. And this is kind of hidden here at the bottom, and I probably should have brought that up live, and I'm going to do it again because I want to make sure that you members know that in your My Classes area, education, My Classes, you have access to a number of series. All members have access to this introduction to the SSG series, whether or not you're a subscriber to the tools. This is a very basic class. If you're brand new to our methodology, I know I went fast tonight. This is a 4-parter with a practice session, basically, and you might want to take a look at the recordings and the class materials that go with that. Also, I'm going to skip down here to adding judgment to your SSG. If you are a subscriber to the tools, whether it's core or plus, you have access to this adding judgment to your SSG. This goes into selecting how to research and how to make those judgments in a lot more detail. And this is where I would point you for that. And then when you're ready, and this one is a plus member benefit, I believe, but this is how to basically do industry studies, which might be your next step after you've kind of mastered your SSGs. All right, I wanted to quickly show you that because there is a little click here to go to My Classes, but sometimes it's helpful just to show you how to get there. Oh, I forgot. There we are. Okay, so user features and requests. We are always open to new ideas. You can go to feedback.betterinvesting.org. Give us your ideas. Vote for the ideas that are there. Susie and I do review that list and use that list to help us with, the next developments that would be coming. So that's where you would go to give us ideas. And if you just have some questions, faq.betterinvesting.org, there is a link in that question mark tab, but there's lots of information there that you can usually find an answer to a common question. That's it. We do have another webinar next week coming up. Susie and I are flipping positions here. She's going to be doing most of the talking. I'll be asking the questions. Hope to see you next Thursday when we talk about SSG Plus instead of our core SSG. Webinars and sign up now. With that, that's it. Susie?
Thank
I
you, Anne, and thank you to all of our backroom staff, and thank you to all of our wonderful attendees. We're a little bit silent right now because we're rapidly answering the final
gotcha.
questions. I would say that if your question did not get answered live or through the chat, we will follow up by email. And please see us again next Thursday, where I will be doing most of the talking and showing you our SSG Plus tool.
Right.
Thanks,
All right.
Anne.
All right. Thank you, Susie. Thank you all. And good night.